Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
In a consolidation mode, while we certainly have risk going into this week with a break of the 133 level on the downside of a move ending all the way down in the 129, 130, 131 area where we drew off that focal point below, and there could be a solid correction down into that zone. But nonetheless, we do anticipate that the markets should may very well even attempt to retest previous highs along the way. The only thing that's right now we're observing is the continued strength of the U.S. dollar. If the U.S. dollar continues to strengthen and commodities continue to sell, that might be an underlying pressure that would not allow the S&P 500 to make it back to previous highs, in which testing support lines down below would be the only path of least resistance. Next year, I want to take a look at the ISE Regional Banks Index, and this symbol JLO, and we continue to see regional banks and even the large financials continuing to be distributed. And we can see here we continue to weaken along the downside, along a very key support line that has acted like support for the last 2-3 months in that March, April, and May cycle. If there's any follow-through selling in the Regional Banks Index come Monday, Tuesday, it would really open up the window for a consolidation, not only down to $23, but if things get motivated enough, we could see even a drop down to 22 or 21. So it's very important for the bulls to dig in support lines and hold the line right in here. Otherwise, any follow-through selling will really start some distribution. Next year, I want to take a look at the ISE Syndex, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And more or less, we've been looking for a measured move on the upside, somewhere in this 140 to 145 level. We continue to have a number of tests up into this zone, but we are anticipating this leg of the move to find some significant overhead resistance somewhere up along these lines, and would not even be surprised if next week brought in some distribution in this area. There is obviously a chance that there might be follow through on the upside if we don't see any major reversal candle follow through come Monday. But overall, we see there a very poor risk reward proposition remaining long this index, in spite of the fact that there may not necessarily be an immediate sell signal here. Just at this point, there's a lot of downside risk for a little upside potential. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and the home builders just gave out that 920 level, and the selling just started to cascade in. We're down at the 883 level, and even though the selling has been very intense and is getting a little bit oversold, the only major support lines will lie all the way down in the 850, 860 area down below. So even if there's short-term bounces, we do fully anticipate that the home builders should have relative weakness. There was an attempt by the home builders in the past to try to break out on the upside, but then the most recent numbers in the housing area continue to come in relatively weak. And now that with the fear of a double dip in the housing sector, we really has put some pressure on this area, and therefore further weakness is very realistic. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and we had that beautiful double top come along that 143 mark along the upside and subsequent reversals down here. We had a break of that 133 to 135 neckline, and really now has followed through selling down to those support lines, which lie in this 127 area down below. At this juncture, we can't rule out there being some sort of a short-term bounce in the snack gas index that could easily retest the 133 to 135, but in the much bigger picture, we think that the natural gas index will begin a much bigger distribution that we could see in a month or two it trading even as low as the 120 to 115 area. So any short-term bounce here should not be used as a buying opportunity, but rather an opportunity to distribute this index. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is symbol UKX, and the UK market has really been far more range-bound, and it has struggled to break out above that overhead resistance at the 605, 610 area, and has continued to consolidate along that support line, which we drew in at the 585 to 590. Really, at this stage, if the S&P 500 and all the other global indices end up breaking the key support lines, the FTSE should follow with a break of the 585 level on the downside, which would immediately open the window for consolidation down to 580, 570, and then potentially down the road a final test of even as low as the 555 to 560 area, which we drew in all the lows from December and March. So we're going to be watching how this index trades right along these zones, as these support lines will be crucial for bulls to hold. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.